Good evening, traders. Thanks for joining us and welcome to this evening's webinar. Well, it's this evening, certainly here in Sydney, Australia, coming to you from the ACY Securities headquarters here in Sydney, Australia. So this evening, I'm going to be taking you through 5 trading strategies. These are strategies that are used and have been developed by professional traders over the years. So before we get started, I'll just show you our risk disclaimer, as this evening I'll certainly be giving you lots of details. So just let me know if you're okay and you can see that risk disclaimer in front of you. If not, please shout out, because I'll make sure that you can see that. Just double checking. Okay, that's great. So have a read through. I won't be going through any personal trading advice or anything like that this evening. I will be taking you through the trading strategies, explaining how they work, talking about trading methods in general, but nothing specific as far as advice goes, telling you to buy or sell this at some point, etc. So have a read through that, and then we will be getting started in about 10 seconds. Okay, folks, so I'm one of the senior market trader trainers here, or trading mentors and account managers here at ACY Securities. So my job really is to spend a lot of time with traders, whether it be people just starting right through to our more active and more educated traders with very specific approaches to their trading. So when I'm doing that, I guess one of the questions I do get asked a lot is to go through and give them different options regarding trading strategies that are used by different traders. So tonight, I thought, before we get in and show you the 5 trading strategies, we'll briefly touch on why trading with a plan is so important to start off with. And then what should a trading strategy actually consist of? Once we've got our head around those 2 things, we can, I guess, look at these 5 trading strategies that I'm going to take you through this evening. The first one is called the dynamic intraday support resistance strategy. It's a day trading, intraday trading strategy. The second one is called your trading inside the range. Okay, so that is a swing trading strategy, as in trades may last hours to potentially days, maybe even a week. The third one is called the time poor trend trader. So as the name suggests, it allows you to get in, do some analysis following that strategy very quickly and isolate opportunities, and therefore be able to do it in a short period of time to find trade setups, okay? The fourth is called the Simple FIB Trader. Okay, so any of you who are familiar with using Fibonacci in your trading will understand how to use that as a simple strategy for entry criteria, and of course, targeting your exits and stops. The fifth one is your key level trader. To me, this is designed more for traders who don't have a lot of time to watch charts, say during the day, but they want to be able to set a strategy and then come and check in perhaps maybe check briefly how they're going on a daily basis or a few days a week, etc. So what I first of all would like to say too about the process this evening is, because we've got 5 different strategies to go through with you in a short period of time, okay, keep in mind, I won't be able to answer really detailed questions about the strategies, but what we do have is a complete breakdown in the form of webinar recordings that match each one. So you can go through and get a lot more detail. In fact, I've already done one recording this week in a bit more detail on the first strategy that I'm going to show you, and you can certainly find that on YouTube. So other than that, folks, feel free to get any questions through to me. I'll be happy to answer them, but I'll try to answer them, of course, in due course or when it's pertinent, okay? So let's get started, and we'll get in and have a look at why trading with a plan is so important. The first thing is you want to be able to identify your goals. That's why you need a plan. The second thing is you need to identify what analysis, therefore, you need to do to potentially achieve those goals. You want to be able to manage your emotions when you're on a losing streak, and therefore you want to just be able to have a plan that you're executing. You want to be able to measure your trading performance as well. And if you're doing different types of trading styles, one of the, I guess the one I hear most commonly is, I just felt like it was going to do something. And I think, wow, that's really hard to kind of gauge over time how your feelings, are they successful? Are they consistent? So the trading plan is certainly going to allow you to look back and say, does this strategy or this plan give me an edge? Is it profitable? Okay. Then I'm able to measure that over a whole series of trades and have a look, and the proof therefore is in the numbers. The next thing is, with a plan, you're able to start to develop processes. So processes, it's like you see an athlete before a game, there's a bunch of things they might do before they walk on a field or on a court. They have a bunch of stretches they do, some warm-ups, listen to whatever music, whatever it is, they do the same thing before that. And it's very similar to that with your processes. I think you've got to sit down at the start of a trading day and have some things that you go through, look at, digest, then go in and start to look for trading opportunities that might match the strategy that you're doing. Okay. Then, of course, you want to determine how much money you're putting at risk. Risk is such a key element of your trading plan. And of course, you want to develop, what is my profit strategy here as well. Okay. So those things to me are elements that are really important as to why you have these things, so that your trading plan is going to be potentially successful. You could go on ChatGPT, right? And you could type in, what should a trading plan consist of? And ChatGPT is going to give you everything that's on the internet. Okay. It might narrow it down, right? It will give you all these different things, and it's very glossy. And you think, wow, ChatGPT, you're so smart. Or the internet, you're so smart. But you end up with all of these things that make, it's like turning a lovely cooked dish with a million herbs and spices in it. Okay. It might even ruin it. Okay. So I break it down to 3 areas to keep it really simple. And number one for me is setup, which is my entry criteria. So once my entry criteria is met, it triggers me into a trade. So I want to know, what is my setup? What am I looking for? What criteria do I have, and have they been met? The second thing is, now that I'm in a trade, either short or long, I then want to be able to just simply manage the trade. So I have some preset perceptions as to what I'm going to do once I get in the trade. For example, am I going to move my stop, say, to break even, so I can get risk out of the trade? And when would I do that? Am I going to take partial profits at some point? What's got to happen for me to trigger, say, a trailing stop loss? Or most importantly, number 3, the exit. Why am I going to decide to exit? What's got to happen? Is it just a profit target that's being met? Or is it, I'm going to exit if I'm up X amount just before a major news event? Is there like some other thing, key things? And I need to have them like literally written down. So this is what I'm going to do, because it's very easy once you're into trade, start changing it, to start saying, oh no, but because this happened. And that's why I think, number 1, what is my setup? Number 2, how am I going to manage this particular trade? And what is my criteria for exit? 1, 2, 3. I keep it very simple. And remember, folks, any questions you've got, just feel free to put them through. Now, just before we get in, have a look at the top 5. I want to just remind you all that what I'm showing you is we're just taking the car, we're doing a test drive. Okay, I'm just showing it to you. And remember, you can use what I'm going to show you absolutely at no cost at all. It's free to all our registered clients. And of course, it's free to register your live account, and there's no obligation to trade here at ACY. So what you'll end up with at the end here is a customized trading configuration set up on your MT4, which I'm going to take you through. So your screens will look exactly the same as mine. You'll get access to your dedicated account manager or mentor that can guide you through them. Okay, when you have questions, when you want to do trade reviews. If you would like to just get access to our 30-part trading course, which goes from beginner to advanced and covers every element of what I'm going to show you this evening, you can certainly have access to that as well. And the live webinars 3 days a week will be done live by our own senior market strategist, Duncan Cooper. And you can certainly ask him live questions because he'll be showing you charts that are derived from these trading strategies that I'm going to show you. You can also get access to our Telegram. So it's a live interactive trading feed that basically provides you live alerts when key levels are reached with an explanation as to why they're key levels. And then finally, for our more bespoke or active traders, we have a webinar called Inner Circle, and that just allows different traders to actually have 5 minutes talking directly to us and talking about their trading, asking questions about their trading, looking at the market, etc. So in effect, you do have a complete education package to back up what I'm going to take you through right now. All right, so I'm just going to move this. So now you should be able to see a chart in front of you, and it is of the dollar CAD. So that being said, I'll just move this out of the way for you. And let's take a look here at the first strategy. So it's an intraday pivot style strategy. So you're basically looking at a number of elements that are used for looking for trade setups. Okay, so I'm on a 15-minute chart and you'll see a whole bunch of lines on the screen. And I'm just going to briefly give you an insight into what they are. So we've got these things called dynamic pivots that have been customized. So you'll see these lines on the screen and then they bend and then they redraw for a new day and then they bend and then they redraw for a new day. Okay, so they are dynamic and they are pivots and they're where we can look for trading opportunities off. Okay, so I'm going to squash this chart in. So it's a 15-minute pivot chart on the US dollar CAD. So if I squash this in, we'll see all the pivots there are there. So you'll notice here, you've got red pivots, bending, full day, bending for a new day. Okay, they're deemed as your intraday trading resistance levels. Okay, then you've got black line pivots. Okay, and they're just regular pivots throughout the day. And then you've got this dotted line. So this dotted line here is in effect deemed as like a level for based on previous days trading for your sort of moving average level, or what we call the central pivot. Okay, for the day. And then down the bottom, you've got these green lines. Okay, so the green lines are seen as intraday support levels. So pretty straightforward. Resistance levels, the red pivots at the top, green support levels for the day down the bottom. The other thing that I like is this can be used for trading around a market open. So you'll see down the bottom, it literally comes up at the start of the day where the pivots are drawn right around the Tokyo Open. So you'll see down here, you might be able to read it perfectly, but it says Tokyo Open. And then you go Frankfurt Open, London Open, New York Open, and then back to Tokyo Open. So in effect, from Tokyo to Tokyo, that's one whole day. Now, the other element that we have on the chart, just to be useful for intraday trading, is we've got today's projected high level, just an indicator. It's a projection based on the movement that's happening on previous days as where they see today's projected high level. We've also got today's projected low. And you'll notice that there's this other dotted red line, which is called the figure, which basically means that happens every 100 pips. So you'll see there's one up here and there's one down there. And one of the things I can look at is today's projected low is deemed to be down around a green support pivot, also down at the 124 figure level as well. Okay, so if I'm in a short position and maybe I've been in one, I might start to think, well, where could a profitable level be to get out, to take my profit if I'm short? Then I might think, well, you can see down the bottom here, that is today's projected low, coinciding with a figure and down around a green pivot. So it allows me to get an idea of targets. Same thing, if a sell trade set up, I might say, do I really want to sell intraday into today's projected low, the figure, and perhaps a support pivot down there? All right, so I can use it. Vice versa, if I'm long, I can do the same thing, that use it as a guide. Okay, it's purely what it's there for. I just want in front of my face what's quite useful to me and not to confuse myself with lots of indicators. Okay, the only other thing on the chart here you'll see is I've simply got a MACD histogram down the bottom. All right, so I'm going to go through and sort of show you now how this is used, but let me just double click and put this chart that I squashed in back to how you'd see it. All right, so we can kind of get an idea. That's what the chart is looking like, and those pivots are there for me to utilize. Now, what I'm going to do is just show you the simple 1, 2, 3 setup. So there's three things you got to remember. We want to see a pivot respected. Okay, so an example would be price moved up and it couldn't get above this pivot. It almost respected it, couldn't close above it. It's hit this level, it's turned around. Price pretty much almost got back up to that same pivot level throughout that day before it continued to fail. So we want to see price respected. I would say this one, it didn't quite get there, but again, it's up to you how you're going to use this strategy. Whether you think within 2 pips or 3 pips is okay, as long as you're using the same thing over and over again. Whereas this one, it literally got up there and respected that pivot. As price moved down, you'll see the same thing happen. This pivot then got respected. Price came down and it couldn't get below it. It kind of tagged it and then reversed from there. So to use an example, on the buy side, if we see price come down and respect this pivot, we could at that point draw in, say, a trend line. Again, there's explanations on how to draw in these trend lines for you, but I'll just give you an idea. It's using swing points where you can draw a trend line across points where both candles on either side is lower. So I know I haven't drawn it perfectly onto the top of this blue one, but I think you get the idea. And I'm using the top of this one here. So I'm saying the trend line is down across those tops. And what I'm looking for is, number one, this pivot level is respected. And then I get a trend line break here. At the same time that trend line breaks, I want to see my MACD cross up. So I'll just make this a bit bigger for you for the explanation. So you'll see here, this blue line crosses above the red line, just as the trend line is broken and the pivot was respected. So it's a 1, 2, 3 change of direction that we're after. Okay, we want to see pivot level respected, trend line break, and then our MACD giving us a bit more confirmation, because it could very well be the trend line was broken before it just completely reversed. And therefore, the MACD may not have crossed over because it's using a little bit more time of the candles to give us an idea of trends changing, okay, in the short term. Now, the issue we have is we don't know how long this change of direction is going to occur. We don't have a crystal ball. So therefore, intraday trading, and it can be noisy. So you'll see here, we therefore are just looking for an entry strategy using these dynamic pivots and identifying a change of direction. You can use different methods, but this is just one for this that is taught. Okay, so if I put a stop below the most recent level or just below the pivot, I could say I'm risking, say, 9 pips, let's call it 10 pips, and I want a 2-for-1 risk reward. In fact, it went up 29 pips, so pretty close to a 3-to-1. So if you were targeting 2-for-1 there, risk reward intraday trade, then you'll see that's an example of where that would have worked. Conversely, let me show you the sell side. So let's use, say, this swing point and down here, just to get an idea. And this pivot here is respected. So we can see, oh, that pivot's respected. It's right around the Tokyo Open of the market. So I went in and I drew in my trend line. Let's say we go across there. It's respected. We get a trend line break here. We get a MACD already crossed down. Okay, so 3 things happen. If I was to put my stop, the same thing again, risking about 10 pips. I just want to target 2-for-1. You'll see it comes all the way down to the central pivot or very close to it. So in fact, it got down about 30 pips, 31. So from a 3, there's almost a 3-to-1 risk reward there. And this, of course, is the market yesterday. Okay, so that's what we're looking at. So I'm just showing you the examples of how these pivots can be useful in trading intraday and using these dynamic pivots and following a very simple strategy to enter, as well as managing your trade. Now, on that pivots, let's go and have a look, and I'll show you just a couple of quick examples. This is a bit different. So this is where, if you think about a moving average, often price can get above that moving average, come back down, almost touch it before continuing in trend. So I'm looking at this central pivot, almost like a moving average, and I can see price comes down, and yesterday, or it wouldn't quite, it wouldn't get below it. Okay, these 15-minute candles. So even if I decided at that point of seeing it, tag this over a couple of hours, I could literally come in and go, all right, I'll draw in a trend line even this late. I know you could have got in a lot earlier, okay? But let's just say you saw it and missed it, and you drew your trend line across here, and then you're just waiting, saying, okay, now you get a break to the upside. Okay, obviously a candle before that. So you're using the central pivot as price is putting in higher tops and now higher bottoms, but showing it's respecting that central pivot. You're drawing in a trend line, even if it is after it started to move, and then price moves up from there. Okay. The only thing I would say to you is be aware of these pivots, where right now we've watched price go above this pivot line, back below, back above, back below. It's above again. It's very uncertain at this stage. So at this stage, I'm not sitting there going, I want to trade this either up or down. Okay, it needs to show in this strategy that it respects the level, meaning it doesn't get above it, doesn't close the 15-minute candle above it or below it if it's a lower down pivot. Okay, so that there, folks, is strategy number 1. It's ideal, I guess, for looking for multiple strategies. So I could go through now and say, okay, what's happening with this euro dollar? At the moment, could we get price rally back up and show us that this is actually going to be respected this time, to look for a potential further move to the downside, so we can kind of set trades up in advance. And you can see here, this red one, it's closed above it already. So I would say this at this point, I'm not keeping an eye on. Same going on here, but could we get price rally back up to this resistance level where we could potentially look for shorts going down? And look at this yen. This yen is weakening. So we really are seeing the New Zealand yen really moving higher rapidly. The New Zealand dollar is also moving rapidly higher. So we do have some action going on it's therefore on the New Zealand side. But as you can see, trading setups leading up to this move, you can see that there were levels where the pivots are being respected. And of course, right now we're just back at this dollar CAD. Okay. So that is in effect strategy number one, a intraday strategy using these pivots where you can trade both up and down. Any questions on that so far? Okay, nothing yet. So second strategy I want to get into, this is called trading inside the range. So I'm going to show you what it looks like, and it does allow a similar scenario to the pivots in a fashion, but I'll show you that. So it's called price action. Okay, so we're using price action for swing trading levels. So let me just open it up. And as you can see, just by clicking on it, it will open up a whole variety of charts for me to look at, looking exactly the same, all using this same strategy. Pretty simple, except what we've got, okay, and I'm just looking, we'll go back to say using the Aussie yen, for example. So what it's doing, it's giving me a few levels, and I'll just get rid of a few things that I've obviously drawn on here myself outside of this strategy. But what it does give you, in fact, I'll go to the Aussie dollar. And I'll squash this in for you. Because in effect, what you've got is last month's high is the mustard dotted line, and last month's low, okay, is down here. So what you're able to do is look at trading with trend, but inside the range or inside the candle. If I draw this in, if I connect these two, we're basically seeing what last monthly candle looked like. Okay, so when price came all the way down to last month's level, do we get a rally back up to look for a potential opportunity to short? And we can use a fib tool to pick a level to do that. Or we can, if we're in a short position, do we really want to be selling into last month's low? Or are we happy to take a counter trend trade as well? So we're using these key levels and looking to trade inside the range of either last month, or if you look at the red ones, actually tell us last week's high and last week's low. And of course, this is in a strong downtrend. But I'll just connect these two for you so you get the idea. Okay. So we're looking at, that was the highest part of last week. And then this was the lowest part, okay, of last week. Okay, so we're then able to look for retracements inside the week at key levels to keep trading in line with the trend. Because sometimes you can look at it and think, oh, it's got, but it's really just having an up day inside the range of either last week or last month. Okay, so that's where this strategy is taught to allow traders to take advantage of key retracement levels in the market, and also to look at the last month's high and low or last week's high and low as levels of support and resistance you can trade off or look for setups. Okay, so let's just have a quick look through. So a good example, I'll just show you here. So pound yen, I'm looking at, say, last week. So this was last week's high. This is last week's low. So let's say I came in and put a fib tool in from last week's high to last week's low. Then if price, as it went down the entire sort of week to the lowest point, if I can get price rally back up to, say, the 79 fib retracement level, which is here, and I put a stop above last week's high, and you'll notice it did rally back up to that 79 fib retracement level before failing lower this week, down like 150 pips. So this is where we're saying, okay, if we're looking at a major level of failure and the trend is down, can I use the range of either last month or last week to try and isolate trading opportunities, more swing trading opportunities, where I could either put in a pending order trade, just to say, like, if price was down around here and you drew your fib in, you might say, look, if price gets up to 187.59, I'll trigger into a sell with a stop above last week's high, for example. Or you might decide to go above that most recent high, okay? And you might say, therefore, from that level, I'll target back down to the 38 or all the way down to the 127. Okay, so this is more of a swing trading strategy, trading inside the range. And you can, in fact, also use it, say, if you're trading on a 15-minute chart, you can see them in front of you. Okay, at the moment, there's nothing major to worry about. But if you start to squash it in and you're in a trade, you start to realize, do I really want to buy into last week's high, that kind of thing. Okay, so this is a strategy that also on the 15-minute, rather than drawing in trend lines, so we've got price rallying back up to the central pivot. If we get price break below these dotted lines, that would indicate a price is swinging to the downside, okay? Because the previous low is broken, and therefore you could use a different method for entry, because it's in effect telling you the same kind of thing, that 1, 2, 3 strategy on the pivot. So it's totally up to the user. You can have a more simplified version here, or you could be a little bit more crafty and pick your strategy to give you a more definite trigger. All right, let's move on from the trading inside the range. In fact, I'll have a quick look. So let's just have a look at this New Zealand. Okay, here's a great example. So we're looking at a bounce on that New Zealand US dollar that's occurring right now. Notice how price gets down not only to last month's low, but last week's low, and they're sitting right next to each other. So if you were like, oh, it's going down, I just want to sell, notice how you'd be selling into a level that you think it might be fraught with a bit of danger, okay, where the buyers might actually be. And you'll notice that price is actually broken quite heavily back to the upside, about 50 pips. Okay, so selling into that can be used. But conversely, if you want to go counter trend, you could literally go, okay, I'm looking for a setup where price is showing me that that level is holding as a support level for a short-term trade up. Your other option, of course, is to use it where you're looking at a 4-hourly saying, well, if I put a fib in and just do that whole range, because the trend at the moment is down, it's already up at the 62, or will I wait for it to get up to the 79, okay, and look for a potential change of direction there where I could zoom in on the 15-minute and trigger my entry in, okay? So I know I've covered a lot there. It's more an ideal setup for swing traders and people who are looking to trade off key levels there. Now, let's go into a nice simplistic one, okay? This is the time poor trend trader. Okay, so the time poor trend trader, I'll show this to you. It allows people, when they're getting started in trading, to get a quick start into the market. And for people that don't have a lot of time, they can go in and find setups in it, literally isolate some opportunities in a few minutes, and then revert back and look to see when those particular trades trigger. It's a trend following strategy. It means that if the daily trend is up, we want to make sure that the hourly trend is in agreement, and then we look for a breakout to occur in the same direction as the matching hourly and daily trend. So it does sound a little bit complicated. There's a lot to it, but it's very simple to use. Let me give you an example. All you got to do to define the daily trend is look down the bottom. The most recent candle, what color is it? It's red. The daily trend is down on this Aussie yen. At the moment, though, The hourly trend is green, not a match. We need to have either red, red or green, green. Okay, so this isn't a match. I'll throw that one away, maybe come back later. Because remember, they can change and they can change pretty rapidly. But the whole thing is done on a 1 hour chart. Very simplistic approach. Let's have a look at the Aussie dollar. Hang on, the Aussie dollar is matching. Okay, so we've got red, red. So therefore we would have a bias at trading to the downside on the Aussie dollar. Let's go euro yen, not matching right now. Okay, let's go euro dollar, not matching. Nothing's really clear there. But if I was to show an example of, say, a sell trade on the Aussie yen, how it would set up, you could see at this point here, actually, we'll start with buy. So I'll keep moving through. Pound dollar right now, not matching. New Zealand understanding. But what I'm going to do is show you now, once you do get to that matching, so we'll go with, say, we'll have a look, New Zealand dollar, dollar CAD. Okay, so this dollar CAD is matching. You can see that this is green and the daily's green, and right now the hourly is green. So what we want to see to enter the trade is for price to go up and hit this green dot. It got pretty close this hour, right? If it hits this green dot, it will replace that green dot with a red dot. So let me show you an example just of the setup. I know this was a major news event, but you can see what happens. Price goes up, the green dot is replaced by a red dot. It's a very simple process. You can simply enter into the trade inside that candle and just put your stop below the red dot. Okay, as long as these two are the same color. In this case, they need to be green, right? So later on, we could see this bounce, go back up, hit this green dot, and if the hourly remains green like it is now, and the daily is matching, then that triggers you into a trade. If we look across right now, here's an example that just set up, okay, a couple of hours ago. You'll see price, we have green and green down the bottom here, and price went up, hit the green dot, replaced it with a red dot, and price from there has moved up about 30 pips. Okay, so very simple. Green, green, and then price breaks out. So what we're doing is trend trading, hourly momentum in agreement, but then we want to see price show us it's breaking out by hitting the dot in that direction, okay, of that trend. So it's very simple. You can literally click through, set a strategy, and look for trading opportunities. It is a very basic strategy. So what is the indicator? I've just got a question coming through now about what is the indicator used for this strategy. We'll set, there's a couple of different indicators there that is used. So I'll send you just, please feel free to contact either your account manager and we'll send them through to you so that you can set them up on your MetaTrader 4. In fact, your account manager will also assist you in setting that up, dropping it in for you so that these charts just automatically open up with everything in there. And all the details will be on that indicator. The only thing we've done is customize some of the indicators. So don't feel like we've got these magical indicators that have been created. We've literally customized and packaged things together that traders felt were useful. Okay, so we're not here coming up with any tricky combination. We're just showing you how we're using them, how we're making them easier to visualize as well. I think with the colors, makes life very easy. You're not getting caught up in all the shapes and sizes of the histograms and things like that. And you're able to follow a strategy going from there. So feel free, just send me through an email with your account number at ACY, or if you're setting it up, let me know, and then we'll get all of these configurations I'm taking you through sent out to you and set up, and of course the 30-part trading course that goes through and explains it. Your account manager, no doubt, will book you in and therefore go through and re-explain it in more detail for you as well. All right, thanks for the question. But let's keep going across, because this is one you could use, say, on other instruments such as oil. Okay, you can see here on oil or gold. This is gold. However, gold right now, we're not getting a clear match. Dollar index, okay, is starting to sell off. So yes, it's been strong, but right now the hourly momentum is down. So what we're trying to do is eliminate the profit taking and when the sell-offs are occurring, to look for when that turns positive again and maybe starting to make a charge in line with the longer term trend. Let's have a look at the S&P 500. So I'm going across the world now, and I'm seeing right now there's a lot of uncertainty in the shape and direction of this market, okay? Whether it be the S&P 500 isn't matching, the Dow Jones right now, the hourly starting to turn down. However, we are getting close to that market open. So I hope that gives you a bit of an insight into how that might work. And feel free, of course, just either contact your account manager, email me. Please just send me your email, your ACY live account number, and then I'd be more than happy to assist you in this process. All right, so now let's take a look. This is called the 1 hour momentum trade. Again, a short-term trading strategy. We call it the Simple FIB Trader. So let me show you this Simple FIB Trader. For those of you who haven't used a FIB tool, there is obviously instruction on how it works and how it's used, but let me just take you through, I guess, how we might be using this particular tool. So again, you can use it on different time frames, but for this purpose, I'm going to use it, say, on the 1 hourly. So what we're doing is looking at down the bottom, it tells you the direction of the move, be it up or down. Okay. So if I look, I'm just looking at, say, this Aussie yen right now, which happened to get all the way back up to last week's high. And what you're able to do is look down the bottom and see that this move is down. So that means I can draw my fib from top to bottom. So it's a simple fib tool strategy where I would draw down. I'd find a bottom here. Unfortunately, it gets a bit lower, and I'd say that would be the bottom, and then price starts to rally. So what you can do is choose whether once price gets to either the 62 level or the 79, it's up to you. I mean, the reality is it may not get all the way up to the 79. Okay, that just triggers you into a trade. Why? Because you're trading with the most recent move down. Okay, and as price rallies back up, it actually got, in this case, to very close to the 79 or at it. Okay, you would enter into the trade. So I'll just say that would have triggered me in. And I also would have put a stop just above the previous high, which was also last week's high. So that's what I'm doing. I'm literally going, well, I'm going to enter in here. I'm going to put a stop above last week's high and the most recent high, because what I'm saying is if price goes to new highs, okay, I'm going to call this trade a loser. That's going to be my strategy. I'm going to exit. I'm going to say I've got this wrong, because if the trend is down, we can get these large retracement opportunities to continue trading either up or down. So what I would have done then is said, what will be my target? Well, I could put my target at what we call the 127 extension. So you'll see it there. So you're just drawing the fib tool, and it sort of gives you an indication as to, in this case, going short, what your stop would be and what your profit target would be. And you'll see from this 79, it failed down. Okay, it didn't. It literally tagged that 127 extension. Okay, and would have taken you out. And in effect, you would have been risking, say, 15 pips. And from your entry, you would have been targeting, in this case, about 50 pips. So it's over a sort of 2-to-1 risk reward ratio as well. And let's say you miss this one, then you could, if the trend is going down, this is the idea. We're looking for shorts. So then we draw it perhaps from, I'll just get rid of these lines for you. So then this became the highest point. And we draw it down. We keep moving it down, by the way. If you find, oh, this candle, now it's gone lower. Now it's gone lower. And it goes all the way down here. Okay. And eventually, after watching it, you'll find, or you see this candle happen, you think, okay, I'll call that the bottom. It's just an assumption. Same thing occurs, folks. Price rallies all the way back up. It's uncanny to that 79 level here, where that would have been your entry. And the stop, well, the stop would have been above the previous high level, just here. You might have said, well, it's only another 20 pips to be last week's high. Let's move it a bit more, etc. You can always do that at your own choice. And again, you're targeting this 127 extension. Now, I appreciate price obviously went down a lot further than that, but at least here you get an idea of how you can use major retracements in line with trend. Okay, so if we were to use, say, this example where we got a move up, and I'll just show you the reverse of it. I'll certainly get rid of these fibs, but I think you get a good idea of the retracements, a deep retracement level that you're looking to trade off rather than a breakout like I showed you previously. But in this case, price rallies all the way up here. So this time we might go from, it also says it's green here, this move. So this time we're looking for price to come back to the 62, to the 79, and look, it doesn't quite get there. Okay, so this is a good example. I'll just draw that in where we would have had a target, maybe even a pending order, where we're wanting to see price get back down to this level. And we had a pending order there, but guess what? It hasn't happened. All right, so now we might say, well, don't think price is getting back there, so let's just pull that pending order, or checking in on it, we never saw it happen. So I just wanted to show you can obviously, if it had have got back there, then sure, we would have entered and we would have put a stop just below the previous low, which guess what? Happens to be last week's low, right? So we're almost trading in this range using this fib level, but just doing it on a 1 hourly chart. Rather than a breakout, we're looking for a deep retracement to get in. All right, so that, folks, is the Simple FIB Trader. Again, if there is any questions about that, whether you're looking for the setup or not, be more than happy to assist. I'll have a quick look through now and to see if there's anything really clear that we might be looking for a setup at the moment. For example, we could just be looking right now at this Aussie dollar. So I'll draw the fib because the move was certainly up. You can tell down here, this move up here. So I'd be going from this bottom to this top. And the strategy would be, if I get price to come down to, say, this 62 or deeper to the 79, maybe we'll get price pull back to last week's low, acting as potential support inside the range. And it's a 62 level to 79. So it's a deep level. Then I could say, right, I'll put in a buy trade there. So you can sort of set these up. And the easiest way is to look at the move and what the color is down the bottom, because the big confusion can be, am I meant to be drawing the fib from top to bottom or bottom to top? Okay, but again, there is full webinars available for you, so that answer these questions. And of course, your account managers can set sessions up with you to take you through and explain it in a little bit more detail, or more importantly, doing trade reviews. Okay, the last one is more about a strategy that you might use to look for longer term trading opportunities. So I'm just going to show you how we're using sort of we're setting these strategies up to look for key levels over longer time frames. So I'll put it on, say, our pivots. But in this case, we're almost looking for levels, looking at the longer term trading strategy. So, sorry, the longer time frames. So we're going to be looking at, say, monthly, weekly, daily kind of levels in the market. So let's say we look at the Aussie yen and we go to, say, a weekly chart. You notice how with this Aussie yen, we got a long-term level of resistance, and I've drawn these lines in. So this level here, we have left shoulder on the weekly chart, head, and then we had recently this right shoulder forming. This was basically a major level of both on monthly and weekly resistance, and then I go down to daily, and I'm able to say, all right, if price gets up and test this level on the daily, and look what happens on the daily on this same previous major level, we get another spike head and shoulder inside a head and shoulder, right? So, and if I was to draw in, say, a fib on the longer term from top down to the bottom here, it also coincides at a 79 fib retracement level, okay, of the daily move from top to bottom, as well as being, so what I'm doing with these levels, and I'm saying up here, I would put in, say, 100 pip stop, just keep it really simple, or in this case, just above the previous high level. Okay, I could use a simple approach and say, I want to stay in this trade. I'll put 100 pip stop in, give it some room, and then I want to target at least 200, 300 on the downside. So you'll notice here, it moved down at least 200 within a few days as it's failed up there. So again, these levels, of course, are taught in Duncan Cooper's webinars, and he'll highlight those to you, but it's a far simpler approach where you could set it based on major long-term levels and then set a, say, 100 pip stop, obviously adjust your trade size to suit the risk profile, and then set your target. And it's very much a set and forget type of strategy on the longer term. But that doesn't mean you can't look for 15-minute setups inside of that as well. Now, the final thing I'll show you is our Telegram. So you'll see in the Telegram, you do get live alerts that come up, a bit like that longer term strategy, that highlight it when price is either very close to or there. So you could then say, oh, wow, look at that. I might go in and make my own decision on that. So I guess to wrap up, I just want to thank everybody for coming to this particular webinar. And I hope it's been, enjoyable for you and useful. And if there's any of these strategies that you're interested in, folks, please feel free to open your ACY.com live account. Okay, so if you just type in ACY.com, you'll see it's a very simple process. I am going to just try and drag this across. Okay, and you just click on open an account and put your details in a matter of minutes, you'll be able potentially to have that account open once the documents have been verified by our compliance team. Next step from there, you'll simply have your account manager request that you would like to have all these 5 trading systems or one of them or whatever you like set up, and also the 30-part trading course sent to you as well, and perhaps even book through a deeper explanation with one of the trading mentors, like someone like myself. All right, so if I'm not getting any other questions coming through, I'd like to say thank you very much for attending this evening. I know it's been very quick and it might look like you got an overload of information there, but I just wanted you to get a taste and the logic behind these 5 different trading strategies that you can use in your trading. All right, thank you very much, everybody. Have a great evening.